For more on the big rally, let's bring in Rosenberg research founder David Rosenberg, who, let me guess, David, thinks this is a bear market rally and there's nothing to be excited about. Am I right?
Well, I mean, and I'm not saying you can't be excited about a bear market rally, but we all know that these are rallies that you can rent. You don't want to own them. So you want to have your hedges and exit strategy in place. But it is a bear market rally. It's got all the hallmarks of a bear market rally. We've seen 6 of these already. You know, it reminds me of Warren Buffett's famous line about, the one thing that we know about history is that people don't learn from history. But the biggest rallies in the market historically have actually happened in bear markets, not bull markets, and this is one of them. This is the 7th bear market rally this year, and we're still down 23% on the S&P 500.
So one pushback is on what we're hearing from corporate America, and today was Bank of America. David, I talked to Brian Moynihan last hour about what he is seeing right now from the consumer. Just want to play you this quick clip.
Is there stress for certain consumers out there? No question, but they're employed and earning money, and their account balances at Bank of America continue to be flat August to September for cohorts. They had 2,000 to 5,000 before the pandemic, an average of 3,400. They're sitting with 13,000 account, and it's not going down. It continues to be flattish, and it was growing early in the year. Now it's flat. That means they have money to spend.
That's really good news, isn't it?
Well, the thing is that these bank CEOs talk about consumer spending in nominal dollars. So he's not talking about volumes or the impact of what inflation has done. And we saw that firsthand with last Friday's, retail sales number, Sarah, when you look at real retail sales. And remember that recessions are not nominal variables. Recessions are about physical inputs into the economy. And real retail sales were negative 2% at an annual rate in the third quarter. That's already baked in the cake, and we have negative momentum being built into the fourth quarter. So it's nice to talk about, in before COVID and before this inflation burst that we've had, it'd be nice to talk about nominal dollars in a 1% to 2% inflation world, sure. But what does nominal dollars mean when inflation is running at 8%? So, what he's talking about, really classic money illusion. That's really what he's talking about. In real terms, consumer spending is actually starting to contract.
He did break down the spending picture and divided it by transactions, which are clearly up less than the dollar amount, to show that it was still growing, even with inflation. I think the point is that we're not hearing all bad news, certainly from the banks. We're going to get some other earnings really soon, but that there is a big cushion in the U.S. economy for dealing with, no doubt, our huge headwinds in the form of rate shocks and price shocks.
Yeah, and a lot of that cushion was the lagged impact of the stimulus checks from last year, and that cushion is subsiding at a very quick rate. What is happening actually is you're seeing credit card balances balloon. And at interest rates that are 16, 17, 18%, because people are actually using their credit card, to buy essentials. And that was the big story, actually, Sarah, when you look at the retail sales numbers and you see what people are spending money on. They were spending money on food and spending money on drugs, pharmaceuticals, essentials. The hallmark really of the retail sales number that just came out was that everything else was down, negative 0.1% month over month. And that's nominal, real terms, even more negative. So look at the pattern of what people are spending money on. They are pulling back from the economic sensitive items. And, we can talk about the banks and, they were priced at or below book value. So they were extremely depressed. They were down like 35%. From their highs, and so they're seeing a nice bounce indeed. But the Conference Board produces a quarterly survey on business confidence. I wrote about it today, and it's gone down, to its lowest levels, almost on record. I think the only time historically where it was weaker for the fourth quarter, CEO confidence, not just the banks, but the entire gamut of private and public companies. We're down to their second lowest level on record. That really tells you something was happening in the broad economy from a corporate side.
David Rosenberg, well, thank you for the views. We always appreciate it.